And welcome back to Hustle and Grind Finance. I'm your host, Guy. I'm so glad that you're here. This channel is just getting started, and hopefully so are you. Don't forget to like and subscribe. Most people think building wealth is fast, lucky, or smart. One of those things, which it could be. You could run into a windfall, you could have a lot of knowledge that makes you wealthy, or you could just get lucky. But that's not always how it works out. In fact, that's the rare case. Wealth takes time to build. It requires choosing the right vehicle. Today we're talking about ETFs. Yes, I believe the number one most powerful way to build wealth and the most passive. We're going to get into all of it, and I'm going to share with you my ETFs that I've purchased, the ticker symbols. We're going to get into real wisdom that's going to cause wealth building for you for the rest of your life. ETFs are the most powerful wealth building tool ever created, but most people don't even know why. We're going to get into it, and I'm going to share with you all the tips that you need to know about ETFs. What is this channel all about? It's timeless money skills that last forever. These are not quick quips. They're not news reactions. These are principles that you can use to build wealth for your life and your family's future. So like and subscribe if you haven't already. What is an ETF? Well, I'm glad you asked. They are an exchange traded fund. Essentially, it's a basket of stocks. So it's just a collection of company stocks. That's all it is. You buy into it, and you immediately get this diversification, which just means this spread. Your investments aren't just in this one area. They are over a bunch of different companies. So you're not betting on one horse, to use that illustration. You're not betting on one company. You're betting on a sector, like shipping or like the United States. That's quite a large sector. But you can do that, and I'm going to show you how right now. Why are ETFs so powerful? I'm glad you asked. Diversification reduces risk. We all need risk to live. You can't do anything without risk. Just breathing and consuming food is risky. So there is a certain level of risk that you must take to build wealth. You should be okay with ETFs. They're a relatively safe investment. Low cost is another reason why ETFs are so powerful. There's ways for you to invest, but the initial buy-in or the maintenance on that investment is so high that it becomes riskier. Well, ETFs have a very low fee risk. And so more money is compounding. And so what compounding means is the first year is not the same as the last year. So the first year of investing, you don't make as much as your second year, your third year, and so on and so forth. That's how wealth building later on becomes exponential. All right? ETFs are simple, and simple keeps you in the game. It keeps you invested. They are truly passive, and we're going to talk about that in a minute. ETFs let you focus on consistency, not constant decisions. Many of you do not want to keep making decisions. You're decisioned out. People ask you where you want to go to lunch. You're done. You don't want to answer because you make decisions at work. You make decisions at your personal life. You just don't want to make financial decisions. And that's what ETFs can offer you. It's totally set it and forget it. The key line here is the best investment strategy is the one you can stick with. And that's the truth. If you can stick with it, it is successful. Even if it's not the highest yield. I mean, if you buy a random stock and it shoots up 200%, yeah, an ETF is probably not going to compete with that, but also your risk went way up. So ETFs are a perfect balance, and we're going to talk about later in this video who ETFs are for, okay? So time is the real advantage here. ETFs reward patience. If you don't need that dollar, which you probably don't, then invest it and it's going to grow. You don't need to time it perfectly. You've heard people say, hey, it's good time to buy into this stock, and you stress out because you're looking at all these charts and you don't know when it's best to jump in. Don't worry about it with an ETF. Right now is the perfect time to buy an ETF. You don't need to time the highs and the lows of the stock market. Okay, small, steady investments compound into something meaningful later on. ETFs make long-term ownership easy, and this is the key. So long-term, steady growth. And actually, it's not like a bond. Typically, your yields are much higher. They're almost in the 8 to 12% range, depending on the ETF. And of course, depending on the year of the overall market, okay? So ETFs aren't passive income, they're passive investing. Unless you're getting dividends from a fund, it's not income. So you're not gonna see it in your bank account, but you're gonna see it in your brokerage account or in your retirement account, okay? So you can sign up with a big brokerage firm, there's a bunch of them, and it will grow inside of that fund tax-free. Consult your tax advisor, but until you withdraw. Typically speaking, in finance world, we say this a lot. Typically speaking, unless you're pulling it out, you're not going to get taxed on it. Okay, but people blur the lines between passive income and passive investing because you don't manage these things, you don't actively trade, you don't deal with tenants or repairs like a real estate, investment. Dividends feel like income, yes, but compared to real estate, side hustles, and businesses, it's not really income. So know the difference there. My ETF approach, this is kind of fun. So it's with Charles Schwab Bank, the investment firm. It's online. They have very low fees. In fact, you can buy and sell for free. They used to charge $10 years ago. They don't charge that right now. SCHA, which is small cap, SCHF, which is international, SCHX, which is large cap, and then of course, who can't invest without the SPY? The S&P 500 is the flagship investment index, as you call it. It tracks the top 500 US companies. So everybody's got to have a piece of this. And so I have SPY. But you'll notice there, I am spread out. I have international and large and small companies. Okay, it's not a comprehensive, you're gonna need bonds and some cash. So I left that out, but I just showed you what my ETFs are, so you get an idea of what I'm using here. Well, ETFs versus mutual funds is a very important distinction. You must get this. ETFs and mutual funds often aim for the same goal, but they don't attain the same result. ETFs are typically more efficient, meaning that they have more money in your pocket at the end because they have lower fees. So they tend to have lower fees and higher transparency. Mutual funds are manual a lot of times. They are traded by a team of people who buy and sell equities, and ETFs end up with a better tax efficiency. You don't pay as many capital gains tax typically than you would with a mutual fund. The reason is because they're buying and selling inside of that mutual fund, and it can sometimes trigger capital gains, which typically ETFs do not. So check your data sheet on whatever you're purchasing for the details. The simple tax explanation is this. Mutual funds can trigger capital gains even when you don't sell. So that's important to know. ETFs, typically not. That gives me more control and you more control over when you pay taxes. You're eventually going to have to pay taxes on all income that you get, but just knowing when you're going to pay taxes is helpful for a lot of people. If you like the idea of knowing everything ahead of time, stick with ETFs because you have a little bit more control. All right, who are ETFs for? They are for people with jobs, okay? People without debt. People with families who have no time to go to their computer and see the latest stock chart. They're not the Warren Buffett of their family. They don't enjoy candlestick charts and the ups and downs of the market. They get stressed when you think about money. If this is you, if you are busy with kids and you have a job, you need ETFs because they are low maintenance, low fee, high income over the decades. a high result. So people who want progress without stress, people who want to build real wealth, that's who needs to buy ETFs. Here's some common myths about ETFs that you need to know. ETFs are boring. Okay, anybody who says that, it's probably a good thing. Sometimes the flashiest thing is a trendy thing, but it's not long lasting. ETFs have stood the test of time. They haven't been out for very long in the grand scheme of things, but they are very boring, and that's a good thing. ETF myth is you need lots of money. No, you don't. The buy-in for this is very low. You do not need a huge investment. And again, the fees are wrapped into the investment. And a lot of times the investment companies aren't even charging to buy these funds. So that is false. Another common ETF myth is now is not a good time because the market is high, or the market is this, or the market's that. You know what? Right now is a good time. The myth is that you need to wait for a downturn so you can catch the bottom and go. It's like, we're at the high, but we're going to continue to be even higher. So the earlier you get in today, the better. ETFs, they don't require excitement, they require discipline, and they require small investments over time to build wealth. Well, where does ETFs fit inside of a smart money plan? So if you are from debt to broke to wealthy, where in between should you buy an ETF? That's a fantastic question. It should come after your emergency fund. So I just did a video on $1,000 emergency fund. Check it out. That's number one. You've got to get your emergency fund in order. Number two is lose the high interest debt. So prioritize on killing the high interest debt. Why would you invest in something that doesn't produce the same as paying off your 12% loan? So you've got to pay off this high interest debt. And then number three, that's when you buy the ETF after your high interest debt. Like if you have a 2% mortgage, yeah, you could go ahead and buy ETFs depending on your goals because you're going to make more than likely more than 2%. Okay, so ETFs are not gambling money. They are owning money. It's ownership of money. It's real assets. So wealth building on this channel, as you can see today and you will see in the future, is not flashy. It's being consistent. I'm so glad you joined me here on Hustle and Grind Finance. I hope that you like and subscribe this because you're gonna really be glad you did. Until next time, later.